Have you heard the good news? FHFA came out with the new 2023 max conforming loan limits. And you're probably saying, what the heck is that and who cares? Well, I'll tell you why it's important. So listen to the end of the video. This could affect you, it may not, but it definitely affects somebody you know, and this way you'll be in the know. So the FHFA just came out with the new 2023 conforming loan limits. Every year they look at what's happening in the market, they look at appreciation, and they look to see what is an appropriate average home price and how much should the max loan limit that a buyer should be able to obtain when getting a new home or a refinance based on values in the market. So when the FHFA keeps raising the conforming loan limit, that means there's a good outlook on what values are doing and what home prices are doing in terms of economics and showing that our values are staying up and moving in the right direction. So right now, the max conforming loan limit as of 2023 is going to be $726,200. And the max high balance, meaning in certain areas like Denver Metro would be one, parts of Florida, parts of California, lots of different areas have high balance loan limit areas. And that is going to be $787,750. So who cares? What does that mean to you? Well, if you were trying to buy a home and you only wanted to put 5% down, but not going into the jumbo lending world where guidelines are more strict, you need bigger down payments, higher credit scores, lower debt to income ratios, et cetera, more reserves. So you just want to do a normal conforming loan where you don't have all those extra restrictions and you only want to put 5% down. What's the max purchase price you could do? The max purchase price you could do would be $829,210. So if you want to buy a home for $829,210 and put 5% down, which is $41,460, you could get a high balance loan of $787,750 if you're in a high cost loan limit area. Now, some people might say, well, who would want to do that? Why would you want a loan that high with only 5% down? Well, there are plenty of people that are just coming out of school that are new professionals. Maybe they haven't saved for their down payment, but they make great money, the income is there, and they can afford the payment, and they don't want to pay rent anymore, and they want to buy a home that they are not going to outgrow quickly, but a home that they can grow into and maybe be in the next 5 to 10 years. So if they have a little down payment, but they can afford the payment and they want to buy a home that fits their needs in an area they want to be in, this could be a great loan for somebody like that. The other situation might be somebody buying a home that needs remodeling and they want to reserve their cash and put the least amount of money down so that they can keep the rest of their cash to do the remodel. Maybe they have $100,000 or $200,000 additional put aside that they want to use to update that home. This way they could put the little down payment, keep their cash, do the remodel, and when all the work is done and the new after value is there based on the improvements, we could refinance and get rid of their private mortgage insurance since they were on a 95% loan, putting less than 20% down originally, but now maybe that loan amount is 80% or below with all the improvements they've made. So there are lots of situations where this might be the perfect loan for you. And the good news is that FHFA has a positive outlook on our values and they've increased the max loan limits for 2023. We're excited about it. I hope you are too. If you'd like to get a loan strategy and talk about numbers, purchase prices, your max loan limit you could qualify for, give us a call today. We'd love to help you. Michelle.oddo of the Oddo Group, Illuminate Home Loans. Let us help you get a strategy and get into your next house.